Good morning and welcome to the IG Daily Market Update for Friday the 7th of January. Now the big news today is going to be US Non-Farm Payrolls data out at 1:30 GMT. Until then we are really sitting in a bit of limbo and market news is fairly thin. We're seeing European equity markets slightly weaker as we await those figures, with the FTSE 100 down around 35.59.85 and the wider reaching FTSE Euro First 300 and EU Stocks 50 down around 0.5% each. Back in the UK, ARM Holdings is the big faller on the day, down 4.5%, giving away some of the recent gains made after announcing the upcoming project with Microsoft. Tobacco stocks, Imperial Tobacco and British American Tobacco have had a bit of a downgrade from Citi, who have put them down both to hold, and they're on off 2% as a result. Elsewhere, we're seeing the oil and mining sectors both weak this morning as commodity prices continue to slide against the strong dollar. Oil back below the $90 a barrel mark is certainly a welcome sight. However, the inflationary pressure still remains in the medium term. Now, looking elsewhere, Goldman Sachs has clearly been doing their homework over Christmas, and they have issued a number of upgrades and downgrades to European drinks manufacturers. Upgrades for Saab Miller in the UK and Rémy Cointreau and Pernod Ricard in France to buy, with downgrades for Carlsberg and Heineken, the Danish and German brewers respectively. Outside the FTSE 100, we have to look to find a notable gainer on the day, and it's JD Sports that come up trumps, up just under 3% after giving very good numbers for the Christmas period up to January. This is good news for the very battered retail sector as they continue to fight the bad weather and the VAT increase, and some choppy roads ahead. Now, German retail sales also coming out this morning, much worse than expected for the month of November, down 2.4%. This is ahead of other major EU data today. We saw Q3 GDP slightly revised down 0.3% from 0.4% growth, and also the headline unemployment rate in the Eurozone staying stable at 10.1%. Now, as a result of some of this data and also the dollar strength recently, we're seeing the euro back below the 130 level against the dollar. The French finance minister has said that they see no one leaving the euro over the next year or so. However, Deutsche Bank aren't so sure, and they have said that the safety and the security and the survival of the eurozone is no longer certain and should not be taken for granted. Elsewhere in the FX markets, we're seeing cable pretty flat ahead of the figure. We're trading around 150.450. And as we go on to talk about the major point of the day, US non-farm payrolls, we're seeing expected growth in jobs for 150 to 175,000 in the US. That's the expectation. Bear in mind that ADP figure, the private sector figure on Wednesday, which is sometimes a good indication of non-farms and sometimes not, was massively different to expectations. 297,000 jobs gained in the private sector, with expectations being only in below 100,000. Now, also we're looking at the unemployment rate in the US, expected to fall by 0.1% to 9.7 from 9.8, and really this is going to be the focal point of the day and possibly suggest where the markets will move over the next week or so, as we've seen a little bit of profit taking after recent highs over the last couple of days. Now, with that in mind, we're seeing markets slightly mixed today. US equities off around 0.2% in general yesterday. We're now seeing the Dow up around a dozen points, 116.97, with the S&P down around a point at 1272 even.